Hello everyone. Welcome to the course Money Management 101. Enjoy watching. Hey! Ever seen news about the government wasting billions on something absurd while the country drowns in debt? People get furious and worried. But did you know nearly every country is in debt? India, Germany, Switzerland, Qatar, you name it. Even the wealthiest countries aren't immune. Japan owes double its GDP, and the US. A staggering $36 trillion and counting. Sounds wild, right? So, why do countries go into debt? Why not just print endless money? Is debt really that terrible? And if countries owe money, who are they borrowing from? Can a nation ever be debt-free? In this video, we'll break it all down. Let's get started. Section 1. What is national debt? National debt, or public debt, is the total money a government owes. Just like individuals take loans, governments borrow when their spending exceeds their income. However, countries borrow from multiple sources, not just one bank. They get loans from other nations, large financial institutions, and even their citizens. Importantly, national debt only includes the central government's debt, not state or local debts. It also doesn't cover personal debts like credit cards or mortgages. So now you understand national debt. But why do countries borrow in the first place? Let's explore that in the next section. Section 2. Why do countries borrow money? Why don't governments just print more money? If they did, they would flood the economy with cash, causing runaway inflation and crashing the economy. This happened in Venezuela and Zimbabwe. Borrowing, however, keeps governments disciplined since debt comes with interest. It forces them to manage their finances more carefully. Now, why do governments borrow? To cover budget deficits, sometimes tax revenue isn't enough to cover expenses. Borrowing fills that gap. To invest in growth, borrowing funds critical infrastructure, roads, schools, and hospitals, which benefits the economy in the long run. To handle crises, wars, natural disasters, or pandemics often require immediate financial responses, as in the U.S. borrowing $3.8 trillion for COVID relief in 2020. To pay off existing debt, sometimes governments borrow to pay off older loans, continuing a cycle of borrowing. This isn't always problematic, but can spiral if debt isn't managed. To control inflation and interest rates, governments can also borrow to regulate the economy, either to reduce inflation or stimulate growth. Section 3. Who lends money to countries? Governments borrow from domestic sources, like citizens and banks, foreign lenders, and even their own central banks. Domestic lending often involves bonds, where citizens or banks buy government securities in exchange for interest. Foreign lenders, including other governments and commercial banks, also purchase bonds. If a country is economically unstable, it may turn to the IMF for emergency loans, although these often come with strict conditions. Central banks can also lend money by printing new currency, but this can lead to devaluation or hyperinflation if done irresponsibly. Section 4. Is national debt a bad thing? National debt can be beneficial when used wisely. Borrowing can help stimulate growth, support infrastructure, and stabilize the economy during crises. However, excessive debt can lead to a debt trap where more money goes toward paying interest than on essential services like healthcare or education. A high debt load can hurt a country's credit rating, making future borrowing more difficult and expensive. But, if managed properly, debt can be a tool for national growth. Section 5. Can a country be debt-free? In theory, yes. But in reality, almost no country is completely debt-free. The closest example is Macau, which is a small region with strong revenue from casinos. However, being debt-free is not practical for most countries. If a country eliminates debt, it would require severe cuts in government spending or huge tax hikes, which could hurt economic growth and spark protests. Plus, government bonds are critical for pension funds and financial markets. Without them, economies would face greater instability. Conclusion. Debt is a double-edged sword. If used wisely, it can help a country thrive. If mishandled, it can lead to disaster. So, when you hear, "Why does our country have debt?" now you'll know it's not about debt itself, but how it's managed. Thanks for watching. If you want more videos on debt and its impact, don't forget to like and subscribe.